So welcome to Rajiv Rao Accounts. Now, in my last period there, in our last class there yesterday, we have discussed about the final accounts there. So final account basically consists of trading, profit and loss and balance sheet that we have discussed. What items will be there in trading, profit and loss, balance sheet that we have discussed. Today let's continue the particular topic. Now today let's see the treatment of some particular items in the final accounts there. Okay, so what are those items? One by one let's take and let's discuss it. See, if you people are aware with these particular things, then it will be nothing but you will be able to handle your final accounts problem easily. So simply here you should understand any item which is appearing in the trial balance, okay, then we are going to record it at only one place in your final accounts there. It might be in trading account, profit loss and balance sheet. Whereas the items which are appearing in the adjustments there in the problem, okay, adjustments means here the items which are appearing in the adjustments, they are not at all recorded till today in your books of accounts there. So twofold effect we need to give it. That means we are going to record it at two places there, okay, in final accounts. Okay, so what items, in other words, where we should post it, okay, what is the treatment we should give it in the final accounts. Regarding that, let's discuss those items today. So first let's take closing stock. Okay, as you are aware, closing stock is nothing but it is the stock of the goods left over at the end of the year here. It is a closing stock. So this particular closing stock, if it has appeared only in the trial balance, okay, if it has appeared in the trial balance, we are going to record it at only one place. Okay, where you are going to record it if it is appearing in the trial balance. See, closing stock will appear only on the balance sheet asset side here. Okay. That means if closing stock is given only in trial balance sheet asset side you are going to post it there. Okay. See, if this particular closing stock is given in adjustments there, at that time, whenever it is being given in the adjustment, we need to write adjustment entry. So what is the entry for closing stock if it is given in the adjustments? Adjustments means below the trial balance they will be giving these items there. So closing stock if it is given in adjustment, our entry will be closing stock account debtor to closing stock account debtor to trading account. Okay, so this will be the entry, closing stock account debtor to trading account. There is the entry, adjustment entry for closing stock. Now when it is given in adjustments there, the twofold effect here is one, you are going to credit to trading account. Okay, trading account, credit side we are going to post it. Then again, balance sheet, we are going to post it on asset side. Okay, so here it should be very much clear to you. Closing stock if it is given in trial balance, only one effect, balance sheet asset side. Closing stock if it is given in adjustment, the twofold effect you are going to give it is one you are going to post on the credit side of trading account, another one balance sheet asset side. So this is about closing stock. Now let's take the second item. It is nothing but outstanding expenses. Okay, outstanding expenses. See, outstanding expenses means here you should understand that this is an expenditure due for the current year. Okay, in other words, say expenditure due but not yet paid. Just like salaries are due to be paid for the year, but you have not yet paid because we are preparing our final accounts on accrual basis there. Expenses paid as well as payable we should take it into account. Similarly, incomes received and receivable for that year, that also we should take it into account. So simply here you understand outstanding expenses are nothing but expenses due but not yet paid. Just like outstanding salary, outstanding rent, outstanding wages, something like that. So if this particular outstanding expense, whatever expense it might be, just like outstanding salary or outstanding wage, outstanding rent like this. So if they have given us in the trial balance there, only one effect here is in the balance sheet you are going to post it on liability side, because simply you observe here. See, liability side, anything which is payable to the others, their outsiders, is a liability to us. Okay, in other words, here the money which is to be paid, it is a liability. As such, outstanding expense is a liability. Just like outstanding salary if he has given, balance sheet liability side you are going to write. Outstanding wages if it is given in trial balance sheet liability side, something like that. So if this particular outstanding expense is given in adjustment below the trial balance, at that time we need to write the entry. What entry we are going to write? Simply because we are preparing accrual basis there, you should add to the concerned expense account there. So simply if you imagine your expense account there, okay, just like take for example outstanding salaries if he has given. Okay, what we should do, if you take this as salaries account, Salaries account being an expense account, it will be showing the debit balance here. Salaries, opening balance will be debit balance because it is an expense account. Outstanding salary we should add to this. So you should post it here. So this is to outstanding salary. Okay, so your entry runs like this: salary account data to outstanding salary. So what we should write here for any particular outstanding expense, a general entry we are writing it generally, which is applicable to all outstanding expenses. Just like outstanding rent is there, rent account data to outstanding rent. Outstanding wages are there, wages account data to outstanding wages. For outstanding salaries, salaries account data to outstanding salary. So simply here you can say expense account data to outstanding expense account. We can write like this. Okay, based upon this you can draft that entry for whichever item which is outstanding there. For outstanding salary, salary account data to outstanding salary. For wages, wages account data to outstanding wages. Something like that. So here, if it is given in adjustment, the treatment you are going to give in final account here is 1. Add to concerned expense account. Okay, this expense account, it might be in trading account or in the profit and loss account on debit side. Just like outstanding wages are there, wages will be there in trading account. So to the wages you are going to add. If outstanding salary is given, salaries will be there in profit and loss account debit side. To salaries you are going to add. Something like that. Add to concerned expense account in trading or profit and loss account, depending upon which expense it is. Then second one here is balance sheet liability side we are going to write, because anything which is payable is a liability to us. Okay, so outstanding expenses, the treatment here is if given in trial balance, balance sheet liability side, if given in adjustment, added to the concerned expense account in trading or profit and loss account debit side. Then again another one is in balance sheet liability side you are going to post it. Okay, this is our outstanding expense. Now similarly, let's take unexpired or prepaid expense. Okay, unexpired, this is the third item. Unexpired or prepaid expense. Okay, simply you understand, prepaid expense or unexpired expense is nothing but expenditure paid in advance. That means you have paid that expense, okay, for the next year you have paid now only. Okay, it is a prepaid expense, expenditure paid in advance. So if expenditure, if you have paid in advance, it is nothing but purely it is an asset till the next year comes there. So prepaid expense is an asset there. So if it is given in trial balance only effect, where you are going to write balance sheet, you are going to post it on asset side because it is your asset. Okay, on asset side you are going to post it. If this particular prepaid expense, okay, if he has given prepaid expense, just like a prepaid insurance, he might have given prepaid insurance. Okay, in other words, insurance expenditure paid in advance. Insurance premium you have paid in advance. That means you have paid for the next year. Next year's premium you have paid now only. It is a prepaid insurance. Okay, so what we should do, since we are preparing final accounts there, in the final accounts, every other expense and income pertaining to that of the year for which you are preparing, it should be represented there. Okay, anything relating to that of expense or income relating to that of the next year or last year's, they should not be considered there. If they are taken into account correct profit for the year, we can't calculate it. So, if he has given any outstanding prepaid expense there, then in other words, in the expense which is there in the problem there, it includes some amount relating to that of the next year. So what we should do, we should subtract from the concerned expense account. So if it is given in adjustments there, your treatment will be 1, deduct from concerned expense account. Okay, this expense account might be in trading account or it might be in profit and loss account, whichever expense it is. Okay, to which that total prepaid expense relates to. Second one, balance sheet. Okay, you should write it on asset side. Balance sheet asset side. So what is it? What is the entry you are going to write from the expense account? We should deduct it. Normally expense accounts will show debit balance. So from that, if you want to deduct it, we should post it on the credit side. So it is a prepaid expense. So your entry will be prepaid expense account data to expense account. Okay, so that is the entry here. Prepaid expense account data to expense account. Okay, just like prepaid insurance is there. From insurance, we should subtract that particular one. So insurance account being an expense account, it will show debit balance. So prepaid expense, if you want to deduct it, you are going to post it on the credit side. Okay, so at that time your entry will be prepaid insurance account data to insurance, something like that. Okay, so this is the treatment. In other words, here these treatments, if you people are aware, doing the final accounts is very simple. So this is the third one. Let's take a fourth one. Okay, now fourth one, let's take fourth, fifth. So fourth one, if you take fourth adjustment, here is nothing but relates with accrued income. Okay, outstanding or accrued, ACCRUED, accrued income. Okay, now what is the meaning of accrued income or outstanding income? Okay, if you say outstanding income, it is income receivable. Okay, if you say outstanding expense, it is expense payable. Okay, so any expense payable is a liability. So outstanding income, if you say, it is income receivable. So income receivable is our asset there. So simple concept here. If this particular outstanding income or accrued income, he says, accrued income is nothing but income earned and it is receivable but not yet received till date. That is accrued income. Okay, so this our accrued income, if he has given in the trial balance, only one effect we are going to show. What is it to our business? It is nothing but it is our asset there. So balance sheet you are going to post on asset side. Okay, now take for example, if this accrued income, okay, if he has given in the adjustments there, that means we should, because we are following accrual method, we should add that particular income receivable to the concerned income account. Okay, normally income account will be there on the credit side of profit and loss account. You will be observing this one. So simply your treatment, first treatment will be add to concerned income account. Okay, in profit and loss account. In profit and loss account, income accounts will be normally on the credit side there. Okay, then again second one, balance sheet, where you are going to show, since it is an asset, we should show it on the asset side because it is receivable to us. It is an asset. Now what is the entry you are going to write for this? What you should do, add to the concerned income account is said. So normally just like commission, outstanding commission if you have said, that means commission amount receivable. We should add to the commission account, commission received account. So commission received account being an income account, it will be showing which balance? Income accounts will show credit balance. So opening balance will be there on the credit side. Again we should add this to it, means we should post it on the credit side. So our entry will be outstanding commission account data to commission. So simply here we can say outstanding income account data to income account. So this is the entry we are going to write it if asked there. Normally while using the final accounts, these two treatments, if you are aware about each item there, okay, you can handle the problem easily. See, next one here is income received in advance. Okay, so this is the fifth one. Income received in advance. Okay, observe it carefully. Income received in advance means here you have received the income in advance. Okay, income if you have received in advance means which year's income it is? It is nothing but the income of next year. You have received it now only. Okay, so in the final accounts, as already I have told you, only items pertaining to that of the current year should be represented in trading and profit and loss account. Anything relating to that of the last year, coming years, it should not be there. So what is this particular one? Income received in advance means that income does not belong to that of the current year, but it belongs to that of the next year. You have received in the current year only. So income, if it is received in advance, it is nothing but it is a liability to you. So if it is given in trial balance, only one effect. Balance sheet, where we should show? Balance sheet, liability side we should show. Okay, in the balance sheet, liability side we should show. If it is given in adjustments only, okay, at that time twofold effect we should do. First effect will be nothing but here deduct from concerned income account there. Okay, there is nothing but profit and loss account credit side, it will be there, the income. From that concerned income account, you are going to deduct that particular income received in advance. Then again, since you have received in advance, it is nothing but liability. So balance sheet, you are going to write it on liability side. Okay. So what will be the entry for this? Simply imagine if this is your particular account there, some income account. it will be showing credit balance. Okay. If you want to add it to this account, you should create it here. If you want to deduct from this, you should debit it here. So what is this? This is income received in advance. It relates to the next year. So from this we should subtract it. So you should post it on the other side. This is on the debit side. So this is your, what is this? Income received in advance. So your entry runs like this. Income account data to income received in advance. Just like commission received in advance. Commission account data to commission received in advance. Okay. So this is nothing but income account data to income account data to income received in advance account. So this is the entry you are going to write it. Income account data to income received in advance account. Okay. Now let's see the next item there. After income, out is the income received in advance. Next we are having depreciation. Okay. Next item here is depreciation. So for depreciation, this is nothing but sixth item. Depreciation. Okay, regarding depreciation, there is nothing much to tell to you people because you have already handled this chapter. So it is a continuous diminution in the value of an asset there when we are using it. So that is called as depreciation. So depreciation has to be written off annually. So if this depreciation is given only in a trial balance, at that time you are going to debit it to your profit and loss account. Profit and loss account, debit side only you should post it. If given in trial balance, at only one place we are going to write. So depreciation if he has given in the trial balance, okay, depreciation on some asset there, you are going to debit to your profit and loss account. If this depreciation is given in the adjustments there below the trial balance, then at that time our twofold effect will be one, okay, profit and loss account, debit side you are going to write. Second one, balance sheet, asset side, deduct from concerned asset. Just like if it is depreciation on machinery, okay, in the balance sheet on asset side from machinery balance, we are going to subtract the inner column. If it is depreciation on furniture, deduct it from furniture on asset side of the balance sheet. Then whatever the depreciation amount is there, that you are going to debit to your profit and loss account. So if it is given in adjustments, twofold effect is something like this. See, what is the entry for depreciation? Already you have learnt in depreciation chapter. Every year when depreciation is provided, what entry we are writing? Depreciation account data R2. See, depreciation account data R2, asset account, that is the entry. Whenever depreciation is provided, this is the entry. Depreciation account data R2, asset account, this is the entry. Okay, now let's see the next one. See, after depreciation, we will discuss regarding interest on capital. Okay, so this is our seventh item, interest on capital. Interest on capital. Okay, what is the meaning of interest on capital? See, interest on capital is nothing but, as you are aware, capital is the money or any particular assets which the proprietor has bought into the business to commence the business. So simply taking business into concept, we can say business is separate, owner is separate there. So instead of investing the money in the business there, okay, if the proprietor, if he has invested in some in outside somewhere, if he would have invested, he would have earned some interest on that. So that interest is charged here. Okay, so it is a notional charge. Simply here you should understand, being the owner of the business there, he will not take away that much interest from the business there on the on his capital, and he will not take to his house there. It will be there in the business only. So simply you are going to write some entry there for adjusting the accounts there. So for this particular one, interest on capital, okay, normally the adjustment entry will be, we will be adding to the capital of that particular businessman. So our entry will be, capital account will show which balance, capital account being a liability, it should show credit balance. If you are supposed to add it, you should post it on the credit side of the capital account only. What is it? Interest on capital. So your entry will be interest on capital account data R2 capital. That is the entry here. Okay, so interest on capital account data R2. Interest on capital account data R2 capital account. This is the entry we are going to write. Interest on capital account data R2 capital account. See, this item normally it will not be given in the trial balance. It will be given only in adjustments there. So when it is given in adjustments, our effect will be one, profit and loss account. We are going to post it on debit side, being an expense to the business there. Second one, balance sheet, liability side, balance sheet liability side we are going to add to capital. Okay, so this is what we are going to do there. This is the treatment we are going to give. So interest on capital is given in trial balance, then it will be given only in adjustments. At that time the twofold effect here is you are going to add to the you are going to debit to your profit and loss account. Second one, you are going to add to the capital. Okay, now let's see the next item there. After this one we are having interest on So next item here is interest on drawings. So just like how interest on capital is accounted here in the books there, like the only interest on drawings. You are aware drawings are nothing but money or money's worth withdrawn by the proprietor for personal use. They are drawings from the business. That was from the business if he has withdrawn. They are drawings. So on the drawings also he is supposed to, in other words, business is charging interest on such particular drawings. So at that time, interest on drawings, what is it to our business? Interest on drawings is a income. So since it is an income, here this is also a notional income. Nothing will come as cash into the business towards interest on drawings. Okay, neither businessman will be paying it, but we are writing only for adjusting the books of account. Here also we are writing the entry. So normally our entry will be interest on drawings account data to drawings account data to interest on drawings. This is the entry. Drawings account data to interest on drawings. This is the entry. Drawings account data to interest on drawings. See, this item also will be given only in adjustments there. It will never be given in trial balance. So when it is given in adjustments there, our effect will be one, profit and loss account, because it is an income to the business. Profit and loss account credit side we are going to post it, credit side. Then again in the balance sheet, okay, on liability side, what we are going to do, we are going to add to drawings. Okay, and see, add to drawings we can say, or simply here we can say because drawings are deducted from the capital there. Okay, so you will be adding to the drawings and ultimately you will be deducting it from the capital only. So I am telling add to drawings here, because drawings ultimately after adding this interest on drawings, the total amount that will be deducted from the capital there. So balance sheet liability side, deduct from capital you can say here, or add to drawings. Okay, I will write add to drawings, or you can say deduct from capital. Okay, both if you write, then you will be remembering that particular one. See, this is the treatment for interest on drawings. Our next item here is provision for doubtful debts. See, regarding this provision for doubtful debts, you should have very much clarity. Now let us discuss regarding provision for doubtful debts in detailed manner. So this is the 9th item which we are taking up here, 9th item. Okay. Now regarding provision for doubtful debts. Before going into provision for doubtful debts, let's discuss regarding bad debts. Okay. Now I want you people to understand this one very much carefully, because more or less in every problem you will come across this bad debts, provision for bad and doubtful debts. Okay. Now regarding this, there should be very much clarity in your mind, because you should be able to handle every problem. In every problem, these items will be there. So what is the meaning of bad debts? Simply here you should understand like this. Money due from the debtor, okay, is said to be a debt. Debt is nothing but money due from the debtor. That means from the debtor, whatever money the business has to receive it, that is called as a debt, D-E-B-T, debt. Okay, if this particular debtor, if he has become insolvent, we can say, or after taking up every other measure there, if the businessman is unable to recover the money from the debtor, okay, then it will become a bad debt to him. So simply what are bad debts? Debts which are irrecoverable. Okay, in other words here, after taking up all the measures also, if you are unable to recover from the debtor, then we will say that particular amount will become a bad debt to the business. So what is bad debt to the business? Bad debt is a loss. Okay, so that loss has to be transferred to profit and loss account. So regarding this particular bad debts there, okay, see, if it is given in trial balance there, only one effect you are going to show. Nothing but profit and loss account, debit side you are going to write it. Bad debts given in trial balance, profit and loss account, debit side only you are going to post only one effect. See, if given in adjustments there, if given in adjustments, see, when he has given in adjustments, what happens here? Twofold effect we should show. One, profit and loss account, debit side being a loss there. Then second one, balance sheet, asset side, comma, deduct from sundry debtors. Okay, from the sundry debtors you should subtract this particular item. If he has given an adjustment, these are the two effects we are going to give. Debit to profit and loss account is the one. Second one, deduct from the debtors on asset side of the balance sheet. See, for this, what will be our entry for bad debts? Okay, our entry for bad debts will be nothing but, see, we are deducting from the sundry debtor. Imagine your sundry debtor account. Sundry debtor is a asset to us. Okay, and asset account will be showing which balance? Debit balance. So from that, if you want to deduct it, means we should post it on the credit side. So our entry will be bad debts account debtor to debtors. That's all. So bad debts account debtor to debtors account. This is the entry. Bad debts account debtor to debtors account. Okay. So simply here, if bad debts are given in trial balance, only one effect, debit to profit and loss account. If bad debts are given in adjustments, then profit and loss account debit side, balance sheet asset side deduct from debtors. Now observe. Take for example, if bad debts are given both in trial balance as well as adjustments. Okay, nothing to worry. Both the treatments you give it. Whatever he has given in the trial balance, that you debit to your profit and loss account. Okay, in profit and loss account debit side, inner column you are going to write at that time. Then again, whatever he has given in the adjustments there, that amount again you are going to debit to profit and loss account. Already this amount you will be posting it on the debit side in the inner column. To that you are going to add this, and the total you post it in the outer column in profit and loss account debit side. Okay, in other words, both the bad debts you are going to add and you are going to debit to your profit and loss account on debit side. Then again, from the sundry debtors you will subtract only the item which he has given in adjustments there. Bad debts given in adjustments only you are going to deduct from the sundry debtors. That's what the treatment you are going to do. So simply, when bad debts are given in trial balance as well as adjustments, both the treatments you are going to give it. Okay, so that's what the bad debts here is. Okay, I want you people to make it clear that you should be able to make a correct distinction between bad debt and provision for bad debt. Okay, our next item here is provision for bad debts. Provision for bad debts. Okay, provision for bad debts, or we can say provision for bad and doubtful debts. Okay, you can say provision for bad and doubtful debts. Okay, or you can also call it as reserve for doubtful debts. See, all these are one and the same here. Okay, simple concept here you should be able to know. Provision is nothing but here a part of the income set aside to meet some particular expenditure in the future or some particular unforeseen contingency in the future, then you will call it as a reserve. Okay, simple concept is that one to understand here. So just like take for example, what is this particular one? Provision for bad debts. Okay, in other words here businessman, he is aware that as he is running the business there, some particular debtors, if they become irrecoverable there, okay, it will become bad debt to him. Okay, when bad debt is incurred at that time, to compensate that particular bad debt loss there, he should have some money in the business. So for that, what he will do, when he is preparing final accounts there, a part of the income he wants to keep it aside for this particular purpose. What is that purpose? Okay, as on the date of doing the bad debt, as on the date of doing the balance sheet, whatever doubtful debts are there, tomorrow, doubtful debts means those debts you may receive or you may not receive. So those doubtful debts, tomorrow if they become bad, at that time to compensate the money in the business, he needs money. So for that purpose, out of the income, some income he is setting it aside. It is a provision for bad debts. I hope it is clear to you people. Bad debt is nothing but it is a loss. Provision for bad debt is nothing but it is a retained earnings, we can say. In other words, the earnings of the business retained in the business there. For what purpose? Tomorrow, if these doubtful debts today, if they become bad there, At that time, to compensate the money in the business there, this money can be used up. So for that purpose, it is set aside. So this is called as a provision for bad debts, or you can say provision for bad and doubtful debts, or reserve for bad and doubtful debts. Okay, simple concept here you remember. Like this, businessman may create provision for any particular known expenditure or known loss to be met in the future there. It is a provision. So provisions are normally created only when the final accounts are being prepared there. So at that time, our entry for any particular provision created, okay, provisions are created only at the end of the year. So this item normally it will be given in adjustments there. Okay, sometimes it might be given in our trial balance also. I am not telling that it will not be given in trial balance. So if it is given in adjustments, we need to write the entry. So what will be the entry for this particular item there? Okay, the entry will be nothing but profit and loss account debtor 2. Profit and loss account debtor 2. Provision for doubtful debts. Remember, any provision created, for that your entry will remain the same. Profit and loss account debtor to that particular provision. Just like provision for taxation, if it is being created. What is that? To pay the tax, money is needed. So for that, out of the income, some amount he is setting it aside. Provision for taxation. So what will be your entry? Profit and loss account debtor to provision for taxation. Okay, so like that, for every provision, your entry will be profit and loss account debtor to that particular related provision there. So this is the entry. Now here regarding the treatment, if you observe here, treatment. See, this particular item, if given in trial balance only, okay, if this provision for doubtful debts is given in trial balance only, so in trial balance if he has given, simply where he will give in the trial balance, he will give us on the credit side. Okay, this item will be given on the credit side. At that time, in other words, here if provision for doubtful debts is given or provision for bad debts is given only in the trial balance, at that time only one effect you are going to give. It is nothing but profit and loss account. You are going to post it on the credit side. Clear? See, if given only in adjustments there, this provision for doubtful debts, if he has given only in adjustments there, if he has given only in adjustments, at that time, okay, twofold effect what you are going to do here is, in other words, he has given only in adjustments there, he has not given the trial balance. In that case there, this is the entry you are going to write for this particular adjustment, and your particular treatment will be profit and loss account. You are going to debit it because this is the provision, okay, you are creating now when you are doing the final accounts. Whereas if he has given in the trial balance, this provision is created last year, okay, it is not created in the current year. So this is the one which you are creating now at present when you are doing the final account. So it is an expense to the business, as such you are debiting to profit and loss account, because every provision is a charge in the profits of the business. Every charge will be debited to profit and loss account. So that's why you are debiting to profit and loss account. Second one, balance sheet asset side, you are going to deduct from where? From sundry debtors. Okay, we will be deducting it from sundry debtors. This is the treatment if he has given in adjustments only. Okay, when he given in adjustments only. Take for example, if this particular item, if it is given both in trial balance as well as adjustments, then, okay, I am writing it here, don't get confused, I am writing it here. So continuation of this, if given in trial balance and adjustments, so if given in trial balance and adjustments, what you should do here is, here there should be clarity in your mind. If given in trial balance as well as adjustment, that means in our problem, provision for bad debts he has given in trial balance as well as in adjustments below the problem. At that time, you should think like this. Okay, given in trial balance, okay, in other words here whatever provision for doubtful debts given in the trial balance, that you are going to assume it as old provision. Okay, in other words, a provision created last year. Okay, the one which is given in adjustments, you are going to assume it as a new provision. Okay, that means provision for doubtful debts which is given in the trial balance, you are going to assume it as a last year's provision, old provision. The one which is given in the adjustments there, you are going to assume it as a new provision created now. Okay, is a new provision. So now regarding treatment, what you are going to do here is you are going to compare these two. Okay, so here I will write note, compare both provisions. Compare the old provision with the new provision. Now treatment, what treatment you are going to give? See, A, if new is more, than old, that means if new provision is more than that of the old provision, at that time you are what treatment you are going to give? Debit to profit and loss account. What you are going to debit? Difference between the old and the new, whatever difference is there, that amount you are going to debit to profit and loss account. And another treatment here is balance sheet asset side. Deduct from sundry debtors. What you are going to deduct? New provision. Okay, new provision means the one which is given in adjustments. Always remember, from the sundry debtors you are going to deduct only the new provision, the one which is given in adjustments only. Okay, the one which is given in the trial balance you are not going to deduct it. So this is the treatment. When new provision is more than that of old provision, at that time debit to profit and loss account, the difference between these two. Similarly, balance sheet asset side, you are deduct from sundry debtors only the new provision, the one which is given in adjustments. Now this is when new is more. Take for example, if old is more than that of new. Okay, I am wrapping up this particular part now. See, B I am writing here, continuation. If old is more than new provision. Okay, old provision is more than the top new provision. Here you are comparing it now. When you are compared between old and new there, if old is more than the top the new provision, at that time, okay, what treatment you are going to do? Credit to profit and loss account. What you are going to credit? Difference between them. Okay, difference between old and new you are going to create it there, if old is more than that of the new. Second one here is balance sheet asset side. What you are going to do? Deduct from sundry debtors. What you are going to deduct? New provision. Okay, always remember only new provision we are going to deduct it from sundry debtors, the one which is given in adjustments only. Now I hope it is very much clear to you people here. Provision for doubtful debts treatment, what we should do. Okay, simply you understand like this. Provision for doubtful debts or provision for bad debts, if given in trial balance only. Okay, profit and loss account, credit side you are going to write it. Provision for doubtful debts, if he has given only in the adjustments, your treatment will be profit and loss account debit side, balance sheet asset side deduct from sundry debtors. If provision for doubtful debts is given both in trial balance and adjustments, okay, so you should go through the problem first before attempting the problem, then you will have that clarity where he has given it. So if he has given both in trial balance and adjustments, at that time you should think in your mind, the one which he has given in the trial balance is the old provision, the one which he has given in the adjustments, it is a new provision. Let's compare these two and let's take a decision. Okay, when you compare it, then you will be knowing it. When you compare it, sometimes what happens, the new provision will be more than that of the old. At that time, the treatment you are going to give here is to the profit and loss account debit side, you are going to write the difference between old and new. Second one, in the balance sheet on asset side, you are going to deduct from sundry debtors only the new provision. Always the new provision we should deduct it from the sundry debtors there. Okay. Then similarly, take for example, if old provision is more than that of the new, if old provision is more than that of the new, then this is the treatment we are going to give. Credit to profit and loss account, the difference between them. Then again, balance sheet, asset side, deduct from sundry debtors, the new provision. Okay. So today, without creating any particular problem to you, coolly we are going up for this final accounts there. Okay. Up to this particular adjustment I have given. So in my next class, I am going to take the remaining adjustments there. Then again we will be taking the problem. Okay, don't be in a hurry to do the problem there. First of all, get yourself acquainted with these particular adjustments clearly, with clarity. So your doing the problem will become very much easy to you. Okay, even if you are getting all these particular items there by doing some 2 or 3 problems, okay, by attempting some 2 or 3 problems with clear clarity, okay, you will be able to handle it without any problem there. So I want you people to go through up to this particular point today. Remaining we will continue our next class tomorrow. Okay, so please do subscribe my channel, please do share it. Okay, coolly, clearly I am trying to explain it. If you are having any particular doubts, you can get the clarification from me. Thank you very much.